What's going on, people? It's GBP baby. Welcome to another video. It's currently 1:33 a.m. on Wednesday the 7th of June 2023. Before I start, I want to say that I have made a Discord, so I'm going to leave a link for that below. Feel free to join. We can discuss charts, whatever there, and it'll be a nice way to start building the community. So you can see that yesterday delivered nicely. If you watched my Monday review, you'll know that I wanted to see us trade into what was a bearish order block on the 4-hour and then turn away. That's precisely what happened, and we traded quite aggressively lower into this bullish order block, and now you can see we're in some kind of consolidation. This has happened before, but you can see that the data has actually changed again. So this candle here was a up close candle yesterday when I analyzed it, which is why it was acting as a bearish order block, but now it's a down close candle, which is really annoying. I know it sounds crazy, but the data's changing, so it's possible I might change the broker I use to look at my data. Anyway, price delivered as expected. London, we made a high, trading into this wick at 1 a.m. And then you can see that price left precipitously, trading into relative equal lows, resting below here, and straight down into this fair value gap that rested here. One thing to take note of is how price traded down. So you can see that the wicks are all overlaying each other here, 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 here. So you can see how the wicks are trading into the previous candle's wicks, and this is showing how this is creating almost like a defense. So it's showing that price wants to go lower, and it's what's the word? It's rebalancing. So it's constantly rebalancing this range. Again, giving reason to expect lower prices, and for this area to start acting as resistance. You'll see I've already highlighted it in red, but I'll get to that in a minute. Another thing to take note of is that yesterday I was saying how it was likely that we wasn't going to take out these lows first, and we were going to trade straight up. Prior to my I never used to fully understand price to that extent, in that I would have thought price would have come down, taken out these relative equal lows, and then moved higher. But in this circumstance it didn't, and I was aware of that because it's things like this within price action that I think it's best just to go and study for yourself. Have a look and see why price didn't take out the sell side before it went to the buy side, because it's quite interesting. Once you understand that, that's what you call market profiling, understanding how you want price to trade to a certain level, because it's one thing being able to call the level, but knowing how it's going to get there is another story. So I'm going to move into why I have these this red box highlighted. On the 4-hour, I've marked out another bearish order block, and I've marked out the 50% level. You can see that during Asia, literally just now, we traded into this bearish order block and had a reaction. I've also marked out the 50%, which will be consequent encroachment. So I want to see this act basically as resistance. You can see we traded through this fair value gap. So now our next level would be the open of this, which we traded through, and our final level for resistance should be this mean threshold. If price is to trade above this, then I'll stay out the markets and I'll wait, because it shouldn't really be trading above the mean threshold of the bearish order block if we are bearish. Also take note of the break-in market structure we had here. This is showing that price wants to go lower, so I'm just simply seeing this as a retracement, meaning that I'm looking for sells again within this bearish order block. Furthermore, remember that we sold already when this was a bearish order block. We sold here, so you can imagine that smart money is going to be wanting to be selling at a similar price, and that's why I've got my eyes on this area for looking for sells. Again, we're in a premium. If we draw out the total trading range that we're currently in, you can see we traded just above the 50% level, meaning that we're entering a premium. So anything above here, I want to look for sells, and then anything below is obviously a discount, and I'm looking for this low to get taken, and eventually these lows. Now we are in a consolidation. As you can see, we've got quite range bound, so we moved lower, up, and now we're like trapped within this range, which is why it's important to have our trading range delineated like this, and I recommend you guys do the same, because then when we drop down to a lower time frame like the hourly, you can see how price is treating the range. So you can see we consolidated around the 50% level. We then just traded up higher, touched the open of the 4-hour bearish order block, and you can see our price instantly wicked away from it. This is again a bearish sign. I am expecting this high to get taken, because I do have my eyes on this fair value gap resting here. Now this fair value gap is from the 4-hour, it's an inverted fair value gap. So you can see we traded down, creating the fair value gap. We then traded back through it, and then we traded back through it again. So this should now act as resistance. Bearish, bullish, bearish. So it should act as a bearish fair value gap, meaning that when price trades to it or inside it, I want to see price turn around there. And it also happens to be right at the 50% level of the actual order block itself, which is perfect in my eyes. So yeah, that's pretty much it for this video on my expectations. Again, draw out this inverted fair value gap, see how price treats it, and you can see how this high that we're making here, this is again price engineering liquidity, which is likely to get taken probably during London before price wants to move lower. If we do trade higher, which means if we trade through this red line, which is the 50% level off that 4-hour bearish order block, I'd stay out. I'm going to wait a bit and see what the market's saying. But other than that, I am still expecting lower prices, and I definitely have my eyes on the swing low which was created today. So I'm going to mark this out as sell side liquidity. And also this is sell side liquidity. But right now I am just seeing this as a simple retracement, again tricking retailers into thinking that we're going higher, that everyone's going to be putting their stops below here, when smart money is aware that they're probably going to be selling again within the same order block that it was selling at today. That's pretty much everything, guys. Thanks for watching. This has been GBP Baby. Don't forget to check out my Discord and like, comment, subscribe, you know the drill, and I'll catch you in tomorrow's video. Peace.